Hey, what's going on, everybody? This is Benny, and this is your support and resistance training module. And so I am just going to show you the technical way of plotting on support and resistance. Now, if you've already seen our quarter swing trading method, you know we use a different support and resistance system, but it's still good to know how to draw on support and resistance the fundamental way. All right, so typically support and resistance, they are the areas in which the market makes a turn. All right, so support is considered the floor. All right, you think about a ball, you bounce the ball on the floor and the ball is going to go up. And then resistance would be in reference to a ceiling. Typically with regular force, you're not going to be able to go past a ceiling. All right, you're not going to be able to go past the ceiling. So and that is what we consider resistance to be. All right, so resistance is the ceiling, support is the floor, and support and resistance together are the areas in which the market makes a turn. Now, typically, if you watch a YouTube video or any type of video, they'll tell you that support is anywhere the market has hit at least twice. Okay, but that's not necessarily the case. It's basically any place where the market has made a turn. Now, based on the amount of times the market has gotten up to a particular area or down to a particular area that it turns, that determines if that is a very strong support or strong resistance, or if it's a weak support or weak resistance. All right, but typically whenever they say that, they take into the account the wicks of the candles. Right? They take into account the wicks of the candles, but these are just noise. Right? These wicks, they're noise. They're not. They play an important part. Right? If you want to plot your support and resistance on your chart with the wicks, you know, they can play an important part, but we want to get those areas that are the strongest. Okay, so what we want to do is to not necessarily worry about the wicks of the candles, but actually focus on the body of the candles. Okay, and the way that I do this is by going from a candlestick chart and go to a line chart to plot on my support and resistance. All right, and so because also we're teaching you to trade on nothing less than the 1 hour chart, still that doesn't mean that you can't trade on anything less than that, but for this strategy that I'm teaching you, it works best on the 1 hour, 4 hour, daily, weekly, and even the monthly chart. All right, so what you want to do is we do basically a top-down support and resistance analysis. So all that means is we're going to start on the monthly chart and work our way down to the daily chart, and then that way we can trade on the 4 hour and the 1 hour chart. Okay, all right, so I'm going to switch over to the monthly chart. We're on our line chart. Okay, and for me, what I look for, of course, it's for the places where the market makes a turnaround. So for instance, here we see that the market has come up to this point and then it turned around. But what I like to focus on is these areas that make these points. So this would be a resistance here this would be a support. All right, and so let's go ahead and start to put these on. And what I do is for my monthly chart, and let me back up just in case we have a novice. So this horizontal line here, this button here, this gives us our horizontal line, so you want to click on that, and then you can left click and hold and drag your line down to the area that you're wanting to plot it on. So I'm going to start at the top, all right, and I'm going to let it go. I'm going to double click it, and then I'm going to right click the line and select horizontal line properties. Now you may not be able to see this dialog box, but if you're following along with the video, you'll see it on your own computer. So again, we're just going to right click it, select horizontal line at the top of the dialog box, and I like to use lime or any type of green. I like to use green for my monthly support and resistance. So here is a resistance, and I'm just going to work my way throughout the chart. One other thing I forgot is that I usually come up here and I disable the shift button here. It's the button with the red arrow. I disable it because you don't have to go all the way back in time to plot your support and your resistance, but what I do is I disable the shift arrow or the shift feature, and then that way it's going to pull my chart all the way to the right, and then I plot my support and resistance based on what I see, what I'm able to see on my screen right now. So let's go ahead and continue. Alright, just grabbing our horizontal line tool, and every single place that I see a point or an obvious turn in the market, that is where I'm placing it. Okay, and you don't necessarily, if you find points that are really close to one another, you don't have to necessarily plot them on, but I do. Right, I do. So typically what that means is these are going to be our hesitation areas or zones, if you will. All right, so that just lets me know when I'm down to the 1 hour chart. It just lets me know that, hey, this is a hesitation area. So I really want to be patient. You know, we teach you guys to be patient anyway, because we slow the market down by trading on the higher time frames, right? But when I have those zones created, that just lets me know I need to be really patient, because the market may hesitate around these areas. So like I said, I go through, like I said, you don't necessarily have to do this, but this is going to give you more trading opportunities based on the strategy that we use. So even though this area right here is not a fine point, this is definitely a turnaround area. And if you look right here, it even lines up with this fine point here. So, and all this means, if it's not a fine point, the market just it went sideways. It started consolidating at those points. So, all right, this can be a little tedious, but it is very beneficial. So let's see. I'm gonna come here. This is a little area there. All right, and if we take it off of the line chart back to the candlestick chart, that's what it looks like on the monthly. If we drop that down to the weekly, we can see that we have more spacing in between here. All right, so the next thing we're going to do is drop down to the weekly. I'm just going to switch this back over to a line chart, and we're going to do the same thing that we did on the monthly chart on the weekly chart. I'm going to place a horizontal line. I'm going to double click it, right click it, select horizontal line properties, and change this color to yellow. That's what I use for my weekly support and resistance. Alright, and we're just going to look for those areas, those points that we did not get on the monthly, because the weekly it creates its own support and resistance as well. So that's why we're doing this. And then also it helps when we drop down to the 1 hour and 4 hour to know which support and resistance line that we're using. So, and just kind of lets us know how strong it's going to be as well, because if we're at a green support and resistance line, then that lets us know that we are on a monthly, and the monthlies are typically stronger. The higher the time frame, the stronger the support and resistance is going to be. Which is good for us because we like to trade those turnaround points, alright, in the market. Let me see. That's good. There's already one there. I'm going to put one here. I see one here. Oops. Alright, I think that looks good. Now we're going to drop down to the daily. Alright, shift all the way over, and then bring it back. Now with the daily, I use red. So we're just going to plot our first one, double click it, right click it, select horizontal line properties, and select red. Double click it to lock it in, and we continue to plot these points on. And again, it's a little tedious, but this helps. And also, I am on the Euro USD. I'm on EU Forex pair. I like this pair because it has the lowest spread of 2 pips. And if you haven't heard me say it anywhere else, I like the lower spread pairs because I'm not going to be in drawdown very long, and we'll be in profit a lot sooner. And it'll help you to build your account even more. Let's see one here. And I typically, again, I don't go, when I'm doing this, I only plot down to the daily chart. So, and again, technically you don't have to do the whole chart if you don't want. If you want, you could just plot your support and resistance around the area of price point, but at least this way you'll have it done, and if you do this at the beginning of the month, you won't have to revisit this until the next month. So and even then, you'll notice that a lot of the support and resistance that you do for 1 month, it works the same for the other months. Alright, so there's actually one more here where price is currently at. Alright, and then from there we can switch back over to our candlestick chart and drop down to our 4 hour or 1 hour. If you go down to the one hour, it's going to give us more spacing. Alright, and so we see here we are at a red support slash resistance. It just really depends on what this was or what we saw on the daily. So red for me is daily, yellow is weekly, and green is monthly. Alright, and so you can really see that over here when the market came down to this monthly support area, it shot back up, and it shot up really far. But when it came down to this red support area, it shot up and then it bounced back off of the red. Alright, but these green ones, you'll see again that the monthly, it shoots from, it came down, it broke it, it retested it, and then it shot down, and then it kept going all the way to the next monthly support. And so you're talking about a total of, let's see, it retested it here and it shot down. I'm just the total move. You're talking about a total of 220 pips. Alright, over 16 hours, or not even a day. Alright, not even a full day, but over a course of oh, excuse me, I read that wrong. 166 hours. Let me see, what is, I know you guys probably can do the math. I'm going to pull up my calculator and do 166 divided by 24. So that's a total of 6, almost 7 days. Alright, that you could have been in this trade for again 219 pips, or around 200 pips, 220, there we go, 220 pips. So, and based on whatever your lot size was, let's say if you had a standard, so that'll be $10 times 220. Alright, that's $2,200 over the course of 6, almost 7 days, so a week. And again, a lot of people, they make, it takes them 2 weeks. Sometimes it takes, takes them a whole month to bring that in. But you see here, with the opportunity you have with Forex, you can pull that in within a matter of weeks, and that's only at a standard lot. So you, a couple of standard lots, $15 pip trading. So you see the benefit. But again, so this is how you would put on your support and resistance. Okay, support and resistance. So now to know how to use this, you need to take a look at our quarter swing trading strategy video, and that'll show you. But I just wanted to show you guys how it is that I fundamentally plot on support and resistance. So alright guys, as always, happy pip fishing, and if you stay in God, you will stay in control. Alright, until the next module. Bye bye.